Well, that was an interesting day, wasn't it, everyone? Good morning. Welcome to Pre-Market Prep. I'm Spencer Israel. I've got Joel here. I've got Dennis here. The title of
Well,
today's show is "The
that
Stock
was an
Market is
interesting
Wild." I
day.
don't feel like it's ever been more true than it is right now. You've got earnings, and I feel like earnings are like on like the B stage. They're over to the side. Like only the diehards care about their earnings right now. We got so much stuff going on in the overall market, whether you want to say it's the Fed or just look at the price action. Up, down every day. We can't make up our mind. What do we do? That is the question we're going to try to answer on today's show. Jeremy Schwartz, the CIO of WisdomTree ETFs, will join the show in about 35 or so minutes. So stay tuned for that. Hit that like button, and here we go.
This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel.
Let's bring on Joel. And Joel, if you'd be so kind to bring up your charts, please. Let's take a look at the market overnight.
Ooh, overnight, that rally, they're giving a lot back. Couldn't hold that close for like a nanosecond.
Show us your charts.
Oh, show us your chart. Oh, I was just going to say, I'm back in the groove today. I'm ready for some arguments. I'm all fired up, and I forget to show the charts. We're giving back half of that move from yesterday, just drifting lower down 64 and a half handles at 43.39. Crude, that's holding up because if there's a war, then, it's going to be harder to get crude. So crude's only down 6 cents at 83 and a quarter. Gold just being a champ here, holding up near 1840. That's down $2 at 1839.70. Silver weak again, down only a nickel, 23.75. Bitcoin bounced yesterday, but down 650 at 36.570. And now Ethereum, that's continuing lower as well. Quiet day so far in the Ethereum futures. Down $25 at 24.36. As I said, I'm fired up. Let's bring in Triple D. Triple D. What a day in the markets, huh? Harking back to 2008. Is that a good thing?
Yeah, it was like 2008. That's what we saw multiple times. 2 days exactly in October doing that exact same thing, being down over 5% and rallying back to go green. So we do have precedents. We have seen this before, but it's been 13 years. You can kind of feel it. I mean, when we were down, I was talking to you on the phone. I was like, I want to buy some stocks here. I just feel like this is washing out. I tweeted out to my Twitter followers, like, what are you guys buying? I was trying to pick, because I've been saying I'm 46% cash in my registered account. I brought that down, I believe, to about 33. So I put about 12% of my cash to work. What I bought was, and I tweeted out already, but I did diversified buy, and these are long-term buys. Not planning on trading out of these today.
He says
I bought a little piece of Square I couldn't refuse. I bought a little piece of Square. That was like my risk. And I've been talking about wanting to buy Square. And I've been saying if it got to 90, I think I'd dip my toe. And at 60, I would load the boat. I was looking at it yesterday. I was like, I don't think it's getting that far. So that's why I took just a piece. I didn't buy the whole position. I just bought a little piece of Square. I bought a full-size position in General Motors. I nibbled on the way down, and then I just added the whole thing that I wanted back when it got to the 50 handle. Also bought, let me think here. I got to go back to my memory. I don't have it in front of me. I bought an emerging markets ETF. I loaded up that. Just because I've been underexposed emerging markets for a long time. We know that. And I was like, you know what? I'm going to get some exposure there. Just increase my exposure. So I bought an emerging markets ETF. And then there was two stocks. I tweeted them out. The chat probably knows more than I do.
I'm trying to find. I'm going on your Twitter. Oh yeah, you bought GM Square. Oh, you nibbled and win.
Yes, I did. I went a full size position to win. I almost got the low on win. I think I bought win. It might have been in the 78 handle. Like it was right at near the low. And you know who there was a guy that popped on CNBC. And he said, that he liked Win. I was like, oh, I forgot about Win. Thank you very much. And as soon as he said, I went to my long-term portfolio and bought. So I bought Win. It might have been 79. 79, we'll say. So I bought some Win. and then holy mackerel,
And
really
then
rolling
and then
over where
and
I'm
then
very, very distracted. But
and then you bought Virtue, which is
Virtue
a
Financial,
very Dennis stock to buy.
yeah, that is. That's a stock that I've had in my portfolio. I don't have it, and I sell it, and it's back again. And I just know Virtue Financial, we're running a lot of, it's all arbitrage market making, obviously. The one risk with that is if they ever did anything with payment for order flow, that would hurt them if they ever regulated payment for order flow. But they make a ton of money. The PE is low. I understand the business to a certain extent. I'm not a high frequency trader, but I'm sure we have a lot of overlap in strategies. I know when the volatility goes up that they're kicking ass and taking names, so they're doing very well right now. Don't kid yourself. Virtue will be making way more money than they normally do. When the VIX goes up, they make more money. Just like, when the VIX goes up, I make more money. It's the same thing because we're doing an efficiency trading. So, and they're doing market making, which, obviously is very lucrative when the spreads start to get wider in a very, when a very volatile market. So yeah, so those are the 4 stocks I bought. Just wanted to get off of like half cash. It's too much cash. So I put a little bit to work. I'm still sitting 33% cash. Not saying we're all in, not saying the all-time low is in and we're going to go, just nibbling.
I don't really have a bone to pick with any of that, except for maybe Win.
Why don't you like Win? Because of China?
Well, they're trying to sell their online sports book, right? They tried to SPAC it. That didn't work. Now they're shopping it outright for an evaluation of a quarter of what it was valued at in the SPAC or something like that. I'm not really sure where the growth is in Win.
I don't know if it has a lot of growth. It's definitely not a growth play. So if you look, I threw a growth stock, I threw a reopening stock, I threw a couple value stocks in General Motors and Virtue Financial. Yeah. It's kind of what I did, and I threw some emerging markets ETF. So did you do any buying, Joel? Did you buy anything?
No, I did not. The thing with, just say the thing with Win is this has been in a downtrend since July of 2018. So, I mean, it's not your stock that's in an uptrend.
No.
Is improving.
Not much is in an uptrend anymore. Just to let you know, Joel, you're going to be challenged to find uptrends unless you're buying consumer staples.
Yeah, exactly. But on a positive note, I mean, you are building. You just got a wall of monthly support there, and not 1, not 2, not 3, not 4, 5 months in a row. So big money. It takes big money, a long time to accumulate a big position. And you're on some excellent support here at 70s. You just gotta round it off. $80 has been a buy zone going back since September. So it holds in there. Market turns around. You get there's no geopolitical events that affect anything, and you may be okay on it. But no, not that one.
It's just you're making diversified bets. There's a reason
Exactly.
I put a growth stock. We talked about diversification yesterday. My portfolio is very diversified. It's underweight growth, but I want to add a little bit of growth to it. That's why I gave it a little bit of Square, not a ton of Square. So I bought Square, I think, at 106. Didn't get the low. That was the one I was tweeting about. I was like, oh, I bought this at 106 and it's 102 in my face like 10 minutes later. I was like, oh, I'm good at this investing. It ended up going up on the day. But, this is just a stock that I think a company that's going to be into everything for a long time. I believe in Dorsey as well. I believe in Block. I mean, you go into the small retailers and they're using Block. I don't think it's going away anytime soon. I think the valuation's still high, but I think it can grow into, it could grow into 100 times multiple. More troublesome, but it's getting into a little more reasonable. I also thought about PayPal. I was talking with you, trying to debate, do I go PayPal or Square? Because PayPal obviously has come down substantially, and it's trading with a multiple similar to MasterCard and Visa now, which it has been a long time since PayPal has had a multiple similar to Visa and MasterCard. A long, long time. So,
well, I just want to point out one thing that Dennis is automates as much as he can, and one of the things he automates is his position sizing. Well, he doesn't think about it, right? It's either he knows what a quote unquote full position is for him. It's the same size every time, or he's got like a half position when he's less convicted, and he doesn't even. You don't think about that, right, Dennis? You just do. Like, you don't debate your position size.
Okay, so obviously I have multiple hats.
Sure.
This is, I'm talking with the investing hat in my long-term trade and my long-term account. And I think everything through really in my long-term account. From my trading perspective,
how
that
much
is where I
time?
don't really think.
How much time do you spend hemming and hawing? Oh, do I buy 100 shares? Do I buy 200?
No, not much.
50?
No.
Right.
I've got like dollar amounts, so I would say if I'm really convicted on a position, I really, really like it, I might put 3-4% of my portfolio in it. So still very diversified. That would be a large holding my portfolio.
Yeah.
If I had 5%, and some stuff has grown. I mean, the Qs I think are 13% of my portfolio. They've just grown and grown and grown, and we know I trimmed them a couple weeks ago, but it's just grown so much. So it's hard to, this is hard. It's hard to keep it balanced when you have that kind of growth. So, some things just grew really big. I mean, Apple became, I think, 8%. I think MasterCard was 11%. But, I've trimmed the MasterCard substantially, obviously on just recently. But I mean, you've got to rebalance every once in a while. But if you're sitting with 50% one stock, I mean, you leave yourself up to so much risk. So that's why
how much Apple do you think Warren sold in last quarter?
We'll find
I
out.
don't know.
I bet you he sold a boatload.
Oh,
Sell it in.
hey, speaking of that, we'll find out in a couple weeks. But speaking of that, I just saw a headline this morning. The Berkshire Hathaway annual meeting is going to be in person this year. I'm going to throw it out now, so it's in the air. I'm going to try to go to this. It's scheduled for April 30th. I'm going to try to go, whether as media or as a shareholder. I don't care. But
all right, that's cool.
I'm going to attempt to go. Maybe I represent Benzinga. Maybe I just go for myself, but I'm going to try to go. So
for the positive note on your square, Dennis, the last time this had 3 bad months in a row was back in mid-July of 2018. It went from 100 to 50, and then it hung in there for a month. It had a nice rally off that. Then a little COVID happened. But the last 3 times, and this is much bigger, 3 down months in a row. So I'm giving you the technical thumbs up on that. Also, with those stocks, I think you're looking into the future of payment systems. Obviously, things are changing, whether it's Bitcoin or electric. I was at the airport and I was going to buy something. I'm one of these old people that still use cash, and they didn't have any coins. They couldn't. They said you gotta we are out of coins. So all those old coins that I have that my dad gave me 100 years, I'm holding on to those, man. Those have a real value. So I think you're looking out in the future, and I think that those companies are like, when we talk in 5 or 10 years, we'll be long gone doing the show, but we'll say, hey, wow, man, the future of money transfer and payment, Square and PayPal. So
I mean, it's just a matter of balance. So maybe I get rocked in the Square. I think I don't even know. I think it's like 0.5% of my money in Square, like very small, like a third size position. I'd say an average position is 1 to 2%. Because if you own 50 stocks, it's 2% in each one if you're perfect, and obviously I said I own probably 50 or 60 stocks. So it's like 1-2% in each one. But I even go full size on it. So why? Because 1, it's still expensive. But 2 is, you know what? It might grow into that. It's not ridiculously priced anymore. It's still expensive, but it's not like just absurd. So, and it's been cut. We're talking about stock that was $289. It just got down to $100, basically 102. It's a logical spot for it to bounce at $100. Is it going to 60? I don't know. If it did, I'll tell you, I'd buy a lot of it. I'd load up if it went to 60, but I don't think we're going to get that silly. And that's why I'm nibbling. You nibble.
So in the chat, just asked what the emerging market ETF was that you bought. We will have Jeremy Schwartz is going to be on in like 20 minutes. He is also like the guy works for WisdomTree ETF, so he will give us some tickers.
It's EEM. It's Canadian EEM equivalent.
All right.
EEM equivalent.
Yeah.
It'd be a little different, but I looked. It owns like Tencent, Baba, Samsung, Sony. And it's like, that's kind of diversified, and it needed it in my portfolio. I'm really heavily U.S. concentrated, so
that's again that didn't take on a relative. Well, this has been selling off since really February of last year, but you got a couple monthly bottoms in the same area, and on a relative basis, you haven't taken out last month's low, so that's showing some strength as well. I didn't strike, but man, I just think J.P. Morgan just got kicked out of it after not a bad earnings report.
That's what we said, Joel. It wasn't even that bad.
It was not, but that's just what they do to JP Morgan after
Yeah.
that,
Yeah.
and that's a shellacking. So I'm looking at I'm hoping to get another shot at lower, near that low from yesterday. Bank America too, if you're really going with this whole theme that interest rates are going to be going up. The banks. That's where I'm looking to deploy some
And if the market
asset.
continues to get smacked, don't kid yourself. The Fed will be a little
Oh,
more
that's going to happen
dovish.
tomorrow, Dennis.
That could happen. So if this market doesn't rebound today and stays in the gutter, don't kid yourself that you could have Powell talking a little more dovish than he's been talking.
For
He
sure.
won't be so tough guy if this market stays down. So it's going to depend on what happens here. Personally, I think you're buying the dip on it from a trading perspective. So obviously buying dips, selling rips.
Wow.
I wasn't buying the dip from a trading perspective yesterday. I bought it from an investing perspective, but I think now you have some tradable lows. If anything gets near yesterday's low, I think you take a shot.
That's the key. That's the key.
So
right?
I don't know if you're going to get to yesterday's low. Like SoFi is interesting to me. But there's other ones too. I mean, you can put every stock. Let's bucket them all. We rallied 10 to 15% on some of these growth names from the lows, which is nothing short of incredible. So if you start approaching yesterday's low on anything, I think you take a shot. I mean, Teladoc, like here you are at $67, still 72. So if you buy at 72, you got to give yourself really to 67. That's like 8-9%, a little more than I like to give. But I think as you approach yesterday's lows, I think you're going to find
it's a level.
buyers.
It's something
if you can get down there, but I don't think you.
Yeah, you don't want it to. And then conversely, on the upside, and I think for the S&Ps and also for your individual stocks, I mean the close. These stocks are all in the red. I think some of them. I think Mr. Softy even came back and filled the gap from yesterday, which was pretty amazing. They have look at that. It went as low as 280, and then came back and filled the gap. Now they have earnings.
Holy.
Right?
Microsoft 276. That's just incredible. The sell-off, it was capitulatory. That was the feeling of like we're going down, down, down. Okay, this is like a washout low. So everybody's going to ask, Joel, is this the low? Nobody knows the answer to that question. Was it a low? I think so. I think that low could hold for a little while. So that's why I'm saying anything that approaches yesterday's lows, I think you're taking a shot. And if they make new lows, then you get the hell out. I mean, this is an environment where it seems like you get stopped out and everything, so you got to be somewhat careful. But
back at Phil, right?
I'm not shorting stocks here. I'll tell you that much. I'm not initiating a short this morning.
No,
I think you could have initiated a short yesterday at the close because it was just too much too fast. But now we just gave back like over a third of it, and we're approaching over half of it. I mean, it's impressive to give back this much this quickly. If we look from the low 420 to 440 on SPY, 430, 50% retracement in yesterday's move. Maybe you're trying them there.
Yeah, you've had the situation. You had the bad day on Friday. You had the follow through on Monday, right? And then like Tuesday, now you're going to back and fill. Like, oh man, I should have bought. I wanted to buy yesterday. I should have bought. I didn't. I'm going to wait today. I'm going to back and fill. I'm hoping for yesterday's low, but I know I'm not going to get it. I'm going to, because the SPOOs, in order for the SPOOs to go down to yesterday's low, we got to go 116 points below the current low. I think you're going to go down. You're going to find there are going to be bids there. Like we just went down to 43.19. Now we're back up at 34. So it's going to find those points and then find support. Also with the 2-day Fed meeting, Pump and Powell. I mean, he's not gonna re-grease the pump. But I wouldn't be surprised to hear something about, the inflationary pressures that we saw are abating somewhat.
Or the wealth effect.
It's coming.
He'll talk about the wealth effect. I mean, that's really, going to be, some bullets for him here to say, hey, we've been, substantially hit on some stocks here. The wealth effect is, starting to take, hold. If we continue to show weakness here, you can start to cool off those talks. I mean, if the market stays down and continues to go down, throw the Jamie Dimon comments. They should be thrown out the window anyway. 7 rate hikes this year. He is dreaming, talking his book.
Oh my gosh.
There is zero chance. We'll say 0.1 because there's always a chance, but there's almost no chance that you're seeing 7 rate hikes this year. And if the market stays down, I'm not even sure you get 3. So, if this is the way it responds, and you can say maybe it's Russia, there's obviously a lot of other reasons, that are maybe driving, a sell-off here. But the real boogeyman in the room has always been interest rates. It's why we started selling off. It's why growth has been getting hammered. And it hasn't gone away. But as stocks get weaker, the problem starts to fix itself. The inflation problem does fix itself. I mean, if the market collapsed 20, 30%, the inflation problem somewhat fixes itself because you'll have a lot less demand for everything because people aren't going to be buying as much stuff when their wealth just dropped by a third. Exactly. So that is like, how a perfect scenario really. And for Powell is that the market just comes down. He didn't have to do much with rates at all.
It's fucking Powell.
All right, let's move on here to some individual headlines because
we're turning into like this macro show or whatever.
Well, it's the environment we're in. We're in a macro environment. We got to talk. We're
gonna lose all our listeners. They're like they want to know what
they want a stock pick. Yeah, I just gave a couple.
You did. We did. And I told you.
I don't. And I think on the pullbacks here, you're buying like General Motors, $50. It's worked before multiple times for us. We played off this 50. Does it work again? I mean, if the market collapses, we fall 30%, everything's going to get dinged. So it's all probabilities. I mean, if you think you're having a market collapse, you're not buying anything. But I don't think we're in like 2008 where we're going to get, hammered. I think there was growth stocks where we were 2000. But some of this stuff is reasonably valued. We're not nosebleed PEs on like 30-40% of stocks at reasonable valuations.
You just come on. You made fun of me like the other day for like bringing up, "Wait, what's the PE?" And you're like, "It's still high." I don't remember what stock it was, but some of these
the market came down 500 points.
There's definitely some stuff that you can't touch, Spencer, but it's a tale of two tapes, really. You've got this market that we've had nosebleed PEs and all these Kathy names for a long time, and that stuff's come in and it deserved to come in.
All right.
But there is stuff, like Virtue Financial. I mean, high frequency trading firm. You do have the risk if they do regulate payment for order flow, that stock will get hit. That's your risk there. But General Motors, what's the PE on GM?
That was never at issue.
But that's what I'm buying.
All right.
I mean, it'll be somebody else's issue if you're paying, in Square, obviously, I'm paying, 60 times.
Or PE is 7.5. So, yeah, it's whoa.
I mean, it's cheap. They're going to be a big part of EV. Yeah. I mean, they just gave you a nice 20% sell-off. Just throw the baby out with the bathwater. I like GM here. Talking my book on it, but I just reloaded.
There are a number of low PE stocks reporting earnings here. See that segue, everyone? We had Verizon this morning. We had GE this morning. We had 3M this morning. IBM last night. Do you have a preference as to any of them, or can I just
whatever you want
start ripping through these?
Rip them all together.
Let's start with IBM because chronological order. They're out earliest. They were out last night. Stock popped and has faded here in the pre-market session. Earnings were okay. I think it was a fade during the conference call, but the top line number came in above estimates. The bottom line number came in above estimates. And so there's that pop. I'll bring up the chart on the screen so you can see that. I'll let Joe move on.
Are they predicting any revenue growth? I mean, is it the same old story? Just kind of.
Yeah, I mean, revenue growth in line with expectations. So
it's been a tough story for a long time. But if you get near yesterday's low, maybe you'll get some bottom pickers in there.
Yeah, and you had a pair of lows going back there in December too.
Very bad that this turned red though, Joel. Too. Like, I mean, we were up on the report, up substantially. Again, if you're buying rips in this market environment, you're asking for trouble. And when you're paying up at 137 last night for IBM.
Got over 138.
138 for IBM. I shake my head at you, sorry. I probably should have been shorting it, but I don't usually short, on the earnings reports because I get my face ripped off sometimes, but I definitely wouldn't be buying it.
138.41 was a daily high. But you're getting a reset. I mean, I think for this one, if the buyers are serious about this, then I don't think you're going to get a shot at yesterday's low. I think they'll come in at, after that rally yesterday and then trading up to 138.41. I think I'll say, okay, if you want to own this thing, I think the buyers are going to step in at right here, right at the close, just under 129. I don't, it's probably not a great day to report yesterday too, right? Because
Yeah.
we kind of hung up there and then the SPOO sold off. But the Bulls need to make a stand at that closing price. What was it? 129.11.
Logitech. This was a
No, that's not the
company that
close.
had
It's lower.
all the built-in excuses in the world if they needed it
882.
with the supply chains. LOGI. Their numbers are very good though. Their EPS was a beat, $1.24 versus a 97-cent estimate. Their sales also came in above estimates. There, 1.6 versus $1.5 billion. They raised the lower end of their sales guidance for the year, and so again, it was a good report. Especially when you consider, the challenging supply chain environment and all that stuff. All the built-in excuses, they could have blamed anything, and the numbers say, hey, despite all that, it was a good quarter.
And remember, it's trading actively in Europe already, so you're kind of pricing it in. So I wouldn't expect a crazy volatility after we open because the stock has already been open for the better part of 4.5 hours. It's bounced. I think 80's resistance on this thing. I wouldn't be buying anything that's ripping up from yesterday's low. We're talking 71 to 77. It's up 10%. I'm not chasing it.
Maybe give back half of that move from yesterday, right? What was the whole move? The whole move was from, let me see my data window here. We had, wow. Well, I'm going to include the after hours. You had about a 9-point move, so 4.5. So if you want to try and, you don't want to pay up at 77.66, but you want to lean on that low, maybe try and get that at, 74.58 was your low on Friday. So I think if you're trying to buy this on the cheap, as far as the high goes, the high in the pre-market, Dennis mentioned that 80.45. So I'll use that as resistance.
Oh wow, it's already come off. I didn't even notice that.
Yeah, it's come off to $2.5.
What's the other stocks earnings? Like, we're gonna get a ton of reports here tonight.
Yeah. You want me
GE.
You want me to show you? Yeah, GE, Verizon, Johnson & Johnson. Take a look at the calendar though. Look, what's today? Tuesday. We got Microsoft tonight. Texas Instruments tonight. They're interesting.
Softy.
Tomorrow is where things get real interesting because tomorrow afternoon we got Tesla. We get Intel, interesting. The day after is when things really pick up. We got Apple, we get Visa, we get McDonald's, U.S. Steel. So a lot of big name. Robinhood is Thursday. That'll be a fun one. So, yeah, Las Vegas Sands win. We got a lot of reports coming up here. Boeing is tomorrow morning. I missed that one. So AT&T. Let's go to I'm not sure if any of these are interesting more than the others between Verizon, GE, Johnson & Johnson, and 3M. They're all kind of the same type of thing.
Yeah, consumer staples.
They all move, just they move a little bit. Nothing too crazy here. I'm trying to find the biggest mover of the bunch. Maybe 3M would be one.
GE's down almost 4 sticks. It traded down to 90 yesterday.
All right.
Boy, that reverse split really helped them out. It's going to be back down at $14.
Does it get bought near yesterday's low? I think everything you have to really, I think on every single stock we can just blanket it. Any stock challenging yesterday's low could potentially have some buyers. One, maybe some people got caught short. Two, maybe some people are just bottom fishing. They're looking out near yesterday's low. It's a logical spot to look. So I think that's the first spot you look for any stock. Today is, it's a challenging yesterday's low. You can take a shot there. So can you take a shot at 92.29 on this thing? Maybe, but again, this is just GE. I just don't like GE.
That's fair. If you look at Verizon, the telecoms were strong. Well, I mean, it's value, right? So, but telecoms are having a pretty good go of it there for a hot second. They've come off in the last week or so, but if you want to look at Verizon and T-Mobile, actually, Dennis, I want to give you props yesterday because you were spot on with your QQQ call. Not so much a call, but more or less an explanation as to why some stocks were randomly high, like T-Mobile randomly
Yeah.
higher yesterday, right?
Yeah.
Comcast randomly higher.
Yeah.
And then
I mean, Comcast was up; it did have a rating, but there was a ton of other ones in that, QQQs that actually were trading in the green all morning for the simple reason you got to understand the ETF effects. Nobody understands that. Nobody takes the time to understand that. They don't teach that anywhere. You got to figure that stuff out. If you're a market maker, you understand it, but there's not a lot of people that are going to understand the ETF effects. And you see this constantly when something's just down, the Qs aren't down enough. They buy the non-tech components. How it rolls. There's like 20 of them, and they all group together. They have nothing to do with each other, but they're all grouped together because there's such big components in the QQQs. Just lets you know how much ETFs affect this market.
Kind of creeping back towards the low here, down 79 handles.
I keep trying to sell stocks on these rallies,
but Matt Miller wants y'all thoughts on GE puts. I guess that would jive with what you were just saying.
Yeah, no, it's what's down $4. The premiums, be coming in because it's after the report. But I'll just say, blanket statement: if you're buying puts looking to make money, you're going to lose money in the long run. Maybe if you're doing spreads, but there's a reason Nick Shaheen and all these other guys make money all the time because they're selling options. You're selling insurance. You're always fighting time value by buying options. People want to play options like lottery tickets and think they're going to get rich. And most of the time, those lottery tickets expire worthless. The real money is made in selling options.
Well, gee, hopefully you already have the puts. And so I'll just look at it.
If you had the puts, you probably lose too. I mean, what was the expected move on GE?
I don't know. It's down $4.
By the time you get the direction right and it's expected move.
$4.
Like CC says all the time on her show, it's the expected moves. They respect those. So just luck. I mean, it's the natural market making aspect of it that causes that to happen. But GE going into the print, the expected move on this thing was $5. It's the same thing. I mean, it's down 411. It's right in the expected move. You got to understand. That is, I don't care if you don't trade options, and I don't really trade options much anymore. I dabble every once in a while. But you've got to respect the expected move. And that is, you add up the call and the put, strike, and you get the expected move. And more often than not, those stocks stay inside the expected move. And that means the option traders lose. And I don't know how percentages on that, but I just see it again and again and again. Expected move on this thing, $5. It's down 4. Means option traders are likely losing money.
Right. I mean, if you took a shot on the close on something, right? Like they closed up at 90, 96, 76. If you took a shot on like the 96 puts or something, they're probably working for you a little bit, being down 14. If the straddle, not so much. But just looking at it, I don't know. Let's see if we can get to yesterday. If I had puts in this, I'd really be looking for it to push towards that pre-market low. And then the longer it takes to get down to that pre-market low, then it kind of just might little curl and rally and get some of this back. So that's what I'm looking at in GE. What's yesterday's low? Yesterday's low, 92.29 right there. There's your line in the sand. I'll throw out the pre-market low. 92.29 must hold, or you will test the pre-market low.
I have to say, today's really has not gone how I thought it was going to go. I thought we were going to get bearish Dennis, and instead we got party Dennis, which is super bullish.
Look at this.
Super bullish. It's a party. Buy everything.
I even got doggy coin going on there.
I know.
Wow.
Really been.
Who am I dancing with? I can't even tell. Who is that other guy?
He's in the bull camp with you. Whoever he is.
Pretty cool.
Yeah.
He made me look cooler.
It's really not how I thought that.
That's kind of the way Dennis dances.
Yeah, it is actually. I'm a poor dancer.
Let's bring on our guest here. Jeremy Schwartz is the CIO, the Chief Investment Officer of WisdomTree ETFs. Great day to have him on because he's a good top-down guy. Jeremy, you ready? Yeah, he is ready. Jeremy, what's up, man? How we doing?
Good to see you, Spencer, Joel, Dennis. Great conversation.
How we doing? How we doing on this fundamental macroeconomic mumbo jumbo? I mean, you and Jeremy Siegel, you guys are the kings. How we doing?
Well, I mean, he was on CNBC yesterday. He called me on Sunday morning at 7 a.m. Spent an hour and a half talking about what's going on, and he's been pretty consistent and and aggressive on the Fed. I mean, he was calling for a very aggressive inflation for a while, and we're talking back early in the pandemic, and it took a while for the Fed to catch up with him, the market to catch up with him. So he's been, I'd say, at the extreme of the hawkishness side, saying we need to get to 2% on the Fed funds, that they need to slow down the money supply growth. The money, he's been calling out the Fed. We had the former Fed vice chair on our program Behind the Markets, and he said, why is the Fed completely ignoring the money supply? The money supply is a key driver of inflation. We had 25% record money supply growth. And, so he is aggressive, and that's causing that tech rotation that we're seeing. And if they do have to still catch up, the market's only pricing in 4. If they have to get as much as he's saying, there's still more adjustments to happen. And so that's going to be, you talked about being a macro show. That's going to be the big narrative this year, I think, is how aggressive is the Fed?
So he's more in the Jamie Dimon camp then?
It seems like Jamie and him are consulting, because he said 2% by the end of the year, which is definitely not anywhere near consensus.
2% would be, what would that be? 8, 7?
450s. It is. It's aggressive. It's a very aggressive call.
Well, what's that going to do to the market?
Well, that's why I think he said on CNBC yesterday he can see the tech sector, the NASDAQ in particular, going from correction mode to bear market mode, getting a 10% correction in the S&P, right? So people call him stocks for long run perma bull, and here he's saying the market still needs to adjust to a Fed reality that's going to be much more tight than people are giving credit for.
Didn't we get the 10% correction in the S&P yesterday?
And then it bounced right after.
It bounced right off it, but I think, did we touch 10%? I believe we did.
Yes, we did.
Yeah.
Yeah.
So that's already happened. So now what?
It still needs to adjust to this. The market is definitely not saying we're getting 2% on Fed funds.
No, I think the market would implode if we got 2%. But just my own opinion. I think I've said I think we're going to get, maybe 4. I don't even know if they're going to go a half. Like, you think they're going to go? Do they think they're going to go a half in March? Like right off the bat, hit them hard? Or are they going to go a quarter?
Maybe we'll know more and bite in 24.
What is the expected rate? Like, I know it's 88% to raise, but is it expected? Isn't like that's not expected to go a half, is it?
I don't think they're getting into the 50.
They haven't told us anything details.
So where do you hide, Jeremy? I mean, is there anywhere to hide? First of all,
well, that's the whole market challenge is with 7% inflation, and you were just in cash, you're losing to inflation, which is why stocks still are they are the ultimate long-term hedge. Companies do raise prices as their input costs rise. So we do think stocks are good long-term inflation hedges. The short run, they have to adjust to this tighter policy framework. In the bond market, we're talking our floating rate treasury fund, USFR. It's going to be the shortest duration bond treasury fund in the market. The rates reset every week with weekly T-bill auctions. So for our scenario of Fed hiking, you want to be in the floating rate treasuries USFR, which is just a cash instrument, but in the sense that it's got the treasuries, the rates reset every week. And so it's a way it'll be at the end of this cycle, it's our view the Fed's going to invert the curve, and it could be the last cycle happened. This floating rate treasury was the highest yielding treasury fund in the market. That's what we see happening over the next 2 years, and certainly even faster than people are expecting. So I think that's where you want to be in the bond market. Within equities, it's the lower duration assets. Same theme is, within our family, we have things from cloud to cyber to biotech. What's the top performers this year are commodities and high dividend stocks. So high dividends emerging markets, high dividends international, high dividends US are all top performers because they're lower duration. More of the cash flows come from dividend payments. So DEM is the high dividend emerging market. It's very different than things like the broad MSCI or RX state owned. RX state owned is more of the growth tilt, like the tech and consumers, the Alibabas and Tencents, and all of the non-state-owned companies. The high dividends are where you get for value, and 6 PEs and 5, 6, 7% dividend yields on a lot of these commodity companies. So it's if this hawkish scenario plays out, it's definitely the high dividends over growth.
Jeremy, I'm curious where you're seeing the flows right now. Like that's your opinion, but where are the flows going?
To start 2022, and we've had about 500-600 million come into our ETFs to start the year. Interestingly, the top flowing fund has been a Japan currency hedge, DXJ. It was one that had taken off in the 2013, 2015 Abenomics period, about 150 million. The currency hedge, the yen was a surprisingly weak currency. Everybody's calling for the collapse of the dollar. The yen went from 103 to 114. It's been a value trade. It's got, because of the dividend bias, it's more in value than the growth name. So it's been the top performing Japan fund in the Morningstar categories. So that's our top at 150 million to start the year. Commodities in Europe over 100 million. We're seeing broad-based commodity exposure get interest. Our fishing core family is led by NTSX, is become a very popular family. That's sort of third or fourth on our list of inflows.
I'm seeing DNL, which is your ex-US quality dividend fund, up there as well.
Yes, that is absolutely on there. And so that's the idea of, it is developed in EM. So the quality dividend family is our largest ETF in the US. DGRW is the US version, also having a very good 3-month stretch. It's picked up like 600-700 basis points on its benchmark in 3 months because of this sort of volatility. Quality with dividend particular bias has done well. Last year was a high beta rally, so tech quality stocks did better. This is the quality with dividends that's protected well. And DNL in its growth category has been incredibly strong performer. And it's just a sister using dividends, return equity, return on assets, earnings growth as a screen. Combines the developed and emerging markets. So it's like the all-in-one international fund.
Isn't that kind of going contrarian to higher interest rates, or you just figured that people are to fight, if you're getting these good dividends, at least you're staying even with inflation? Is that what the investment philosophy is?
For quality dividend growth, it comes back to, I always call this, and one of the charts going around in the Financial Times yesterday was Buffett versus Kathy, right? You saw
Got that from you, Dennis.
The slow and steady Buffett, and then you had Kathy go up and down. And I've called these quality dividend funds, DNL that you just talked about, DGRW that I mentioned, the Buffett factor. Like, that's actually the first piece I wrote on it 8 years ago when I launched it, is what does Buffett say he does? He says, I like to buy high quality companies at fair prices. It's better than buying cheap, distressed value companies. And what does he mean by quality? He means high return on capital. And when you go through all of his annual letters, he says high return on equity with low debt. So the way I packaged that into DNL and DGRW was, we screen for return on equity, return on assets. That's the Buffett screen. And then it has a dividend requirement, so you got to pay a dividend. Buffett loves those dividend payers from, even Apple is like symbolic of this, but the consumer companies, Coca-Cola, his banks over time been raising dividends. Sort of the higher return equity companies, his Japanese investments, which I'm talking about a lot. Actually, when I talked about DXJ, follow Buffett into Japan is one of the things I've been talking a lot about on DXJ. But the quality screens is what drives that return equity. And Buffett always said, what do you do to keep up with inflation? You need companies with pricing power, which is what's in those DNLs and that quality dividend growth family.
Jeremy, on the flip side, I'm looking at the outflows, and I'm seeing a lot of growthy tech. I'm seeing cloud computing. A China fund is up there. No real surprises there. But then I'm seeing like a mid-cap dividend fund, among the outflow leaders, which is interesting. But not a surprise to see like your cloud fund up there, because it is growth in China, because it's China right now. So
what's interesting is China has turned around a bit, right? Like, so it was the most, to me, that was one of the most surprising things of 2021 was how much China tech was down, and all you saw was inflows into China tech products, both ours and in the industry. You saw massive inflows. That CXSC is our China non-state owned. I put it up against the big China tech funds that you see out there. We're sort of 32 basis points. The others are like 70 basis points. Ours are better performing over the long run, and it's more diversified. And that fund basically doubled in size last year, despite the pressure.
That's crazy.
People were buying the dip.
people
buying the
just
dip.
buy the dip all the way down. Wow. I wouldn't have expected that.
So, Jeremy, I know you've been around the block a few times, and you can never, circumstances never repeat themselves exactly. But, put us into like the different perspective here. You had the '99 tech bubble, right? And that burst took a long time to recover. You had the financial crisis in 2008 with the housing bubble. The pandemic kind of came and hit us aside the head. That was a very unexpected thing, not so much related to economics. I mean, where are we at? I mean, which one would you say we're most similar to? What course out of this, or what course lower are we going to follow? And then what's the course that's going to bring us out of it?
So there's a lot of these meme charts going around about price to sales greater than 20 and how it compares to the tech bubble. And one of the things I had shown was that in 2000, you had basically double the weight of the market that was in these price to sales greater than 20 stocks that you have today. So yes, there are some segments that are expensive. And you mentioned our cloud ETF is one of them. Like cloud is one of the more expensive baskets, but it's less than 10% of the market that's in that. When it got up to closer to 20% of the market in 2000. So the big NASDAQ stocks aren't as expensive as they were back in 2000. In 2000, you had the top biggest stocks in the market were the most expensive stocks. Today, that's not true. There's a compelling case that Facebook and Google are actually cheap value stocks.
That's a really good point. People like to point to the FANGs as like, look, they take up too much space. They're too big. But on a valuation basis, they're not also simultaneously the most expensive. Very interesting note there. I think that's a good point. Sorry, I didn't mean to interrupt your flow.
Yeah, no, so I'd say there are baskets that are like the tech in 2000, but it's not the full market, or it's at least half as much as the full market. So I could see where if Siegel's right on his Fed call, then you could see a little bit more pressure on some of the broader tech indexes. But I do think they're not as expensive, and you'll get people coming back to them.
Also, like, people don't realize that there are yes, the top 5 or 6 stocks take up a quarter of the S&P, but like that itself is not necessarily unusual. It's different companies, but there are always the 5 largest always take up a large percentage of the index, whether it's like ExxonMobil and GE in 2000 or whatever, 2003. But the top of the heap is always made up of a number of very large companies that account for a decent chunk of that. It's just the companies change over time, but it's not necessarily indicative of a bubble just because you get 5 companies at 25% of the index. So Jeremy Schwartz is the CIO, the Chief Investment Officer of WisdomTree ETFs. Jeremy, it is always a pleasure to have you on the show. Thank you for joining us. It's a great day to have you on, and I look forward to tomorrow, seeing what the Fed says and seeing how that call plays, the call for more rate hikes. Not your call, but the other Jeremy's call plays out here this year.
Happy to keep in touch all year as it goes on.
All right, thanks a lot, Jeremy.
Thanks all.
I did want to bring up briefly this chart while we were on the topic of the Fed funds rate and what the market is saying. This is from the CME Group. This is the Fed funds futures. This is what the Fed funds futures market is currently pricing in as far as rate hikes. So you're seeing this is where we are right now. We are at the furthest left-hand side column, and you've got meeting dates there. So currently the Fed funds futures market is pricing in a one rate hike at the most likely one rate hike at the March meeting. This is where we're at right now. So
why does it say January 26th, like 94? What is that?
That would be tomorrow's meeting. That would be
January 26th.
They got a 94% chance of hiking tomorrow?
No. This is where we are. We're at 0.
Oh, that it's going to stay. I get it. So it's
Right.
going to go up to the next.
Right. So there's 94% chance of no hike tomorrow.
Okay.
Right. There is a 5% chance
that they actually hike tomorrow.
Of a hike tomorrow.
Okay.
Right. That would be.
And then there's an 84% chance that they're going to go a quarter.
Exactly.
In March.
Exactly.
Yeah.
Exactly.
Quarter to a half. Yep.
and then it starts to drop off substantially, and then it's
it's
all market dependent.
So wait, so
data dependent, partially market dependent a lot.
So wait, so Jeremy Siegel, remind me what he said. He said 2%. Is that what he said?
Yeah, wowzer. That would be woo.
So that's down here. So we're talking. The market is saying
we could be going down for a long.
What if they hike tomorrow? Now I'm stressed out. What if they lower tomorrow?
So the market is saying a one. There is a 1%. The market is saying there's a 1% chance.
Talking your book.
The market is saying there's a 1% chance.
Actually, a lot of cash.
We hike to 2% by the end of this year.
You went from too much cash to not enough cash.
Well, I put 10% of my portfolio, my long term, not my overall portfolio, but my retirement account to work. So
yeah,
I don't know. We're trying.
Right.
We take chances. That's what we do as traders.
No,
we take chances. We make calls. We do what we can.
We make money. We lose money.
The market tanks like it did yesterday, and they'll start lowering rates. Emergency rate cut.
That's interesting. Know that Jeremy. I mean, he's been. I mean, he's hot. He's hawkish, and he's staying hawkish. I didn't.
Well, the inflation's a serious issue, but wealth effect. Don't kid yourself. Will fix some of those problems. So if you can continue to get a market decline, so it's just going to be. They're looking at it too. I mean, they can say we don't look at the markets, but at the markets at all-time highs, it's a hell of a lot easier.
They do admit that. They do admit that.
I think it's number one on the board. Wealth effect. They just don't talk about it.
They were looking at the markets when the SPOOs were tanking in March of 2020, and they were just buying them.
Oh, I know.
The hand over fist.
Oh, they were going to buy stocks. I mean, that was the rumor. They're going to start even being able to buy stocks and prop up stocks themselves. March 2020 was a lot of fun trading, I tell you that. Still a lot of fun trading. It was fun trading yesterday, too. Let's, go and do some ticker time here because I'm interested to look at some charts as well. Throw us your tickers. We got 8 minutes here. We'll grab a few stocks. We'll see what we got. We got some ideas.
First one that I see is Devon Energy, DVN, from Miguel.
Was there news or rating or something on this? Oh, Kramer bought some. That was it. Kramer. I saw in my Kramer newsletter that he bought some. That's good buy. Wow, Kramer bought the bottom on Devon Energy, and he drove that thing higher. I mean, okay, coming in now? Thing just rallied 42 to 48. No. Sorry, I'm not chasing this.
Yeah, what we have. This is it. I could give you a level just to look at to determine whether or not we're just going to blast right back to 51.99. So what you had a 9-point move, 4.5, 43. So this 47.5, 48 area, right where we're at now. I'd say best case scenario, you just hang out here for a couple days. Put in a couple lows, 47.5, 48, build a little bit of a base, and then make a run at the double top at 51. But this is a little bit too much too fast. First things first, get through yesterday's high at 48.55. That's what
about Baba here?
Oh, Baba.
The Bobster.
Yeah.
I bought it when I bought the emerging markets.
I know. I don't remember if you sold.
No, I'm saying I never bought Baba. I didn't sell my Baidu, which I should have. I sold Baidu, and I should have bought the Baidu because I could have got it cheaper, So
Baidu was
here we go, Baba. You got support down around 110, so 119. You're taking a shot. Look at yesterday's low, 115. Lean on that. Take a shot.
Yeah.
You got to lean on the low, 115.
I agree. Down to $127, and also that was the area, Dennis. When you bought this, you were leaning on the parallels at 1.6, just under 116. So there you are. And how low did it get?
When I wanted to buy it, I never actually.
We talked about it. Yeah. So you got three lows.
I bought JD and Baidu instead.
Yep. So that's for both intents and purposes, that's a triple bomb at 115.5. You just if you're buying it here, you don't want to see that taken out. Things have been kind of quiet out of China lately, right? They want to play night. When the Olympics start? The Olympics starts
next week.
Next week.
They're playing nice.
Dennis, how's that?
Emerging market fund. China's playing nice now.
Wait,
Dennis, how's the curling team looking this year?
I was going to ask, can we get a winter sports? Not now, but next week.
The hockey team is not looking good. I'll tell you that much. With no NHL players.
Not now. Let's do it next week, and we will get Dennis's thoughts on the curling, on the bobsled, on the luge, on all the Canadian sports. Let's keep
I love
going.
the look on his
Downhill
face.
skiing. We rock downhill skiing.
What
You got
about
some good figure skaters too, don't you?
Yeah, we're good on the ice.
That's all you have there.
A lot of ice. Yeah, I'm not gonna lie.
what about hey, look at Twilio for a hot second. How's Twilio?
Twilio.
Let's take a
Wow.
look.
His chart. Oh,
Down $4.
They all look
Yesterday's low, way down at 175. It's just too low for me to. You're not getting down to 175, and if you buy 192, you got to give it to 175. It's not dipping enough.
Yeah, I don't know what this thing hasn't traded. Wow, what was old time? Over 450. This is let's see, 182.12. How low did we get yesterday? Oh, we got considerably below that, 175.36. I don't know.
Find us some stocks
Yeah,
that are trading, approaching yesterday's lows. Is there
yeah, come on.
anything? I don't know if there's anything because we're obviously still 130
Yeah.
points above yesterday's lows from the S&P. But if there anything getting like 50%-ish, maybe you're looking at those.
Let me check the Benzinga Pro Movers tool.
I know there's going to be nothing that's at yesterday's low, but is there anything like when we're pulling back when you had 15% rally in some of these stocks and pulling back 3%? I mean, I think you're buying the pullback in some of these stocks. It's just I don't want to buy so far off of the lows. So
yeah, I'm just looking here to see if there's anything, but there really is not a lot that is.
Unity at 100. Yeah, I could nibble on that at $100. 107 this morning. It's 96 is the low. Cisco, somebody's thrown out there. It's trading down. Down a buck.
I mean, if you're not
or Roblox.
Yeah, if you're looking to if you don't think it's getting to yesterday's low,
I don't think they are.
Yeah, you can look at mid-range or
I think mid-range. I think you're looking at 50% retracements to the yesterday's low. I don't think you're getting down there. I think people are. I think there's the possibility here, and I don't know anything, but I think there's a possibility we could go green today. So I'm not shorting stocks right now. If you're shorting stocks, you had to do it yesterday on the close, and you're covering them right now. So if I was short, I'd be using this sell-off to cover because nobody knows anything. Maybe we're just going to roll over and give it all back, and that would be awful. I don't think it's going to give it all back. I think we're going to, around 430 SPY, the 50% retracement from yesterday, I think you're going to find some buyers, and it would not shock me. I'm not saying it's going to happen, but I'm leaning more bullish than bearish when we're at 433 SPY.
Mitch pointing out that and I mentioned this on Friday as well, that I believe the Robinhood lockup expiration is tomorrow. Something to have on your radar. So
that really came off the lows. $11.15, $12.57. I don't know if the lockup expiration. I'm not following any of that story. I would just say that 11.15 low is probably safe. That valuation, obviously they don't make money, so it's tough to look at. But I mean, the market cap is, at a certain point in time, would somebody come in and buy Robinhood?
Here's a good one.
I think so. Like you guys talk Peloton, somebody at a certain point in time could buy Robinhood. That could happen.
You asked for stocks that are nearer to the low. Starbucks is a good example because it's $2 off of yesterday's low.
Yeah, 95 on Starbucks. If you got down near there, I'd probably nibble.
Man, but every time you go by one of those, they're closed.
It is.
It's weird. I mean, I don't go there. I just like to check the drive-thrus.
Your Starbucks are closed.
Yeah,
they can't. The Starbucks never closes.
No. They're not. They don't open as early. They don't open as early.
They can't find workers.
Can't find workers.
They'll be finding them now after everyone lost all their money in the stock market. Everyone want to go back to work.
Oh, that's possible.
But oh boy, big rally yesterday. If you want to wait and buy this thing on strength, wow, this got back up to Friday's high. What a gift that was. 98.41, 98.35. So no upside until you can close, at least above 98.5. And yeah, you're not too far from the low, 94.41 if you want to lean on that one. Nice candle in it yesterday. It was also in the area. I mentioned a bunch of monthly lows, and these things and they got through them. And that's when you just got to have the discipline. Like, I'm just not going to stick my bid out there. But some of those monthly levels, if you had the patience, to say, wow, it went down through it and now it's coming back up, like that 280 and, you would have been crying and you bought Microsoft at 280 when it went to 276. Conversely, if you had the wherewithal to buy it on the way back up through 280, you're like, oh man, this is, don't even have to look at this one. No, I got the wrong stock up there, but
That's all right.
that's using your monthly levels.
All right, it is 9:00.
Oh, that was fun.
I know.
Yeah.
Time flies when you're bullish. I'm just to be clear, I am not in that camp. Dennis is in by the
Inside day.
I'm not.
Inside day.
I'm not bullish enough that I'm like loading up my long-term portfolio. But as a trader,
Yeah. All right.
you got the day trader hat on right now. I'm buying the dip
all right.
on
All
some
right.
stocks. Buying
I'm
the
gonna
dip
hop,
on some
Spencer. I'll
stocks.
check in
Might
with you
be
later
wrong.
on.
All right. Well, we'll find out in a little bit how right or wrong you are, Dennis. But
I mean, you got to stop yourself out. We're all going to be right. We're all going to be wrong. This is the way trading is. You make bets. You make you make quantitative bets, and you stop yourself out when you're wrong, and you ride it a little more when you're right. That's how you're trying to approach this market.
Part of me wants to be like, well, Dennis, you always say don't chase. The time to buy was yesterday, not this morning. But on the other hand, you do have a clean level here on every single stock. You have a clean.
We're not chasing though. We're down 7. We're down 70 points. If we were up 70, I wouldn't be buying. But we're pulling back. Yeah, I'm saying 50% retracement. Stocks move like we love the 50% retracement. I don't see you chasing here today. You're buying a dip. It's okay to buy dips. We had a rip your face off rally, and now all of a sudden, I'm not saying you're loading up your long-term portfolio, but I'm saying as a trader, if you're shorting stocks when we're down 70 handles, I mean that's the wrong way to do it. So I think I just basic trading is buy dips, sell rips. 70 handles is a pretty good dip, not looking at the rip yesterday, but I mean, the sell-off yesterday was probably overdone. The dip here is people saying, well, we're going right back down there. I'm betting we don't go right back down there. I don't think we go back down there easily. I don't know if we're going green. I think there's a possibility we could.
All right. We'll find out.
That's my thoughts.
This is going to be a fun day. I can only hope it is as fun as yesterday. All right, Dennis, we'll catch you later. Everyone have a great rest of your day. I'm going to hop off. Our next show, live trading with Benzinga. If you dropped a question in the ticker and we missed it, I apologize profusely from the bottom of my soul. But what you can do is tune into our very next show where they will answer your questions. Ryan, Zunaid, Mitch, live trading through the open, giving you what's on their watch list, what they're trading today, and walking you through trades as they're making them. You should check it out. It may or may not be the fastest growing show on our channel right now. Check it out. Coming up next here on YouTube, this stream will end to redirect you straight to that show starting at 9:05 a.m. Eastern Time. Thanks to our guest today, Jeremy Schwartz. Thanks to all of you in our chat. Hey, I have not groveled for likes once today. We're only at 321. If I do a little bit of groveling, can we get to 500? That's a question that only you can answer. So all that being said, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. And we'll catch you guys over on our next show. Stay tuned for that. Everyone, good luck today. Try to stay green, and have a great start to the day.